Okay, hard to believe we're halfway through the year. Good time to be looking at how the housing market performed in the first half of this year. We're going to take a look at some closed transactions for 2010 in terms of the number of units that were sold, average prices, the number of pending sales, and then we're going to take an in-depth look at the distressed sales that have occurred within the trend area. As you probably are aware, last October we added some additional fields to both add edit and also to the agreement of sale information that allows us to capture distressed sales, which is defined as being both short sales and also bank-owned properties, or REOs. We are able to capture that information now, and we have 6 months of good data on it, and we can report on how distressed sales are performing here, because you hear a lot about foreclosure sales and everything nationally. First half of the year in terms of closed transactions was really very good compared to last year, but if you'll remember last year, the first half of last year was rather slow, picked up in the second half, so we're comparing to a slow first half of 2009. The second quarter of 2010, we had 28.3% more closed transactions than we did in the second quarter of 2009, and year to date, we're ahead of last year by 22%. Surprisingly, the average price has not only held up, but it's actually a little bit ahead of last year. Year to date, the average price of the sold properties is 1.6% higher than it was in 2009. That's really good news because we really had a big decline in average price. So now we can see that the prices are stabilizing and maybe starting to inch up a little bit. Okay, pending sales, those that went under contract, greatly influenced by the tax credit that, of course, had to be under contract by April 30th in order to qualify for the tax credit for both first-time buyers as well as repeat buyers. So we saw a huge surge of homes going under contract in March and April, and it just dropped off the cliff then in May. June recovered a little bit, but still very low pending sales in May and June. Because of that, the second quarter was almost 5% lower in terms of pending sales than in 2009. But year to date, we're about 7% ahead of 2009 in the number of pending sales. Now, the distressed sales we were able to take a look at, and when we first started tracking these, it was really January before we were able to get some really good data. Prior to that, in the fourth quarter of last year, many of the settles actually had gone under contract before those fields were available that we added in the agreement of sale information. So it wasn't until January that we really felt we had some really good information. So we now have 6 months of good data on distressed sales that have occurred in the trend area, and we have some interesting numbers on those. One of the things that happened when we first started looking at those back in January, we were looking at both short sales and also the REOs as a percentage of the closed sales. What we noticed was the short sales were consistently between 4.5% and 5.5% of all sales. But the REOs consistently dropped. Started at 15% in January, continued dropping every month until June was 6.5% of closed sales. Kind of led us to believe that maybe REOs are not as big a factor anymore as they were. But when we looked at it, it turns out that the REOs, we had about 400 to 500 every month. They're very constant. So as the sales went up, the total sales went up, the percentage was going down. And the total sales went up every month from January through June, so that's why the percentage of the REOs was going down. They're still very constant, just about 500 a month. Now usually when you see something happening like that that's so constant, there's something keeping it from being higher and lower. And it could be on the supply side, which would be maybe banks can't really process and bring on the market much more than 500 a month. Or it could be on the demand side. there's only so many people willing to buy REO properties. So we tried to take a look to see which one that is. If the limiting factor is on the supply side, that'd be only so many properties coming onto the bank, coming onto the market, you would think that it's probably a seller's market because you have constricted supply. If it's because of demand, you would think it's a buyer's market. So we took a look at the active inventory and found there's about 2,000 REOs in the active inventory. And we're selling 500 a month, typically every month around 500. That's a 4-month supply of inventory. Usually, month supply of inventory, 6 months supply is considered to be a neutral market. And if it's more than 6 months supply, it's a buyer's market. Less than 6 months is a seller's market. So it appears as if this is actually a pretty good seller's market. Overall, the overall market is actually a pretty strong buyer's market. So it's really kind of the opposite of what the overall market is. So when we took a look at that, if it's really a seller's market, you would expect that the time on market for these properties is shorter than it is for other properties. So we broke it down and took a look at time on market, which was from listing until it went under contract, and then also broke it down from time it went under contract until time it's settled. You can see the blue on this slide is the REOs. And in fact, they are considerably shorter on market than the non-distressed properties or the normal sales. So it really strengthens the the idea that it's a seller's market and that REOs are pretty much in demand. The other thing that was interesting, though, when we looked at this was in the time to close, that is, again, from under contract until settlement, REOs were more than 20% shorter than, it took a shorter time to close on REOs than it does on the other non-distressed properties. The other thing that we looked at there, you can see the short sales are just about twice as long from listing until settled as normal sales. We weren't able to segment or distribute the time from list until contract and from contract until closing on short sales because some people, it appears, some agents are reporting the time that the bank approves the short sale as being the contract date rather than when the seller approves the contract date. So we really don't have a good distribution of those two time frames. When we looked at why these things are closing so much faster, why are REOs taking less time to settle than normal sales, we started to look at the financing. And what we found on financing is it's pretty evenly distributed between FHA financing and conventional financing on all three types of sales. But when we looked at cash portion of it, non-distressed sales, only 13% were cash. That almost doubled on short sales to 25%. And on REOs, 61% of all the REO sales were cash transactions. That explains why the time from under contract until settled is so much more compressed because you don't have to go through mortgage approvals and everything else. Most times you don't need appraisers and frequently on REOs they waive home inspections and everything else. So it is a much more compressed time frame from under contract until settlement. NAR did a survey of New York, New Jersey, and Pennsylvania realtors and said, okay, is there really a discount in the pricing on REOs and short sales? The realtor said, well, we think that it's probably about a 15% discount on short sales, and on REOs it's 20 to 25%. Haven't really been able to prove or disprove that, but it seems reasonable from some of the data that we've looked at. One of the things impacting that, though, is property condition. And when we looked at property condition, on the non-distressed sales, 6% were reported as being fixer-up TLC. When you look at short sales, more than doubles. The 13% of all the short sales were reported as fix-up TLC. And on the REOs, 32% of all the REOs were reported as being fix-up TLC. So a good part of those discounts, the bargains that you're seeing, really is taken by the property condition. So one of the questions is, are distress sales going away? Are we working our way through this? If you'll remember, a big part of the distress sales, foreclosure sales and everything, was really on secondary, on the subprime markets. Pretty well worked our way through that. But when you look at this slide that was prepared by NAR for a presentation that they had given, you can see that the delinquency rates and the foreclosure rates, there's a huge wave that's still out there. It started to decline in the fourth quarter, got a little bit better, but we have a long way to go, and distressed properties are going to be with us for quite a while. Right now, it's taking just about 18 months from the time foreclosure starts until bank takes possession. So it's going to be with us. We're going to be seeing foreclosed properties, REOs, also probably a lot of short sales for the next year and a half to 2 years. Okay, talking about distressed properties is feel a little bit like the Grim Reaper, and I'd like to leave on something a little bit more upbeat. In China, and this is an article that appeared in the Daily Finance back in June. In China, in 70 metropolitan areas, they're experiencing rising housing prices. And if you'll remember a few years ago, we were looking at 12 to 15% increase in housing every year. In China, they experienced 12.8% just in the month of April. And now, a 1,000 square foot apartment in Beijing costs 111 times the median household income. Here in the U.S., it's 5.4 times the median household income to purchase the median priced house. So when you think about 111 times the annual income, typically lenders use about 31% as a guideline for what you can spend for your principal and interest, taxes and insurance on your housing. Using that as a guideline to qualify, in China, the average household would need about a 330-year mortgage, interest-free and with no property taxes. So you can be glad you're not a realtor there. I think it'd be a little bit tough to find, to arrange financing for some of those. Thank you for joining us today, and if you do have questions or comments, you can email me and look for further statistics updates on the trend market area. Thank you.